Hello guys, glad to have you on board again today for another intraday session. So the European session is just starting as we speak. As you can see, it's 9 a.m. and 48 minutes. So there is still a lot to go in here, and we'll try to forecast interesting prices area in which we could try to go before the US Open today, and I still tend to believe that we might just reach out to yesterday's bottom or even the day before, because the target area for the prices right now suggests we're probably gonna go terminating the euro area session in here, which will basically pull us back down to previous days lows, and then it's going to be for the US to decide. So it's pretty damn hard to say how it's going to be. We're going to forecast out of the German index first of all, and the 15-minute context really is a range, and to me it seems to be a bearish range, as I thought in here we would have to be a little bit more neutral. The reason why I was waiting for prices to reach out for the context in here with a 61% retracement. That was yesterday's plan. Didn't really work out, but we had a pullback later today, which means this is the price I've been lacking to get. Even though we had signal, it wasn't meeting the conditions. Conditions means you trade in bearish context and no difference. So this is the trade I would have taken normally right in here, and I just didn't. I just missed that trade. When was that? Oh yeah, okay. So I wasn't climbing, so definitely not able to trade this. But this is actually the signal that would have been tradable right before the close yesterday. So this is exactly where the trading scenario would have done. All right, overbought cluster, profit-taking structure in context. Definitely fitting the plan. So this is where you had a trading signal to get into the range. So what is the maturity of that range? So this is a trending range, so bearish range, and as you can see, we've got the first reactivations in here, the first stopping for prices in there. So we're 3 waves in terms of maturity. So we are mature enough to eventually create a trend. We do have lower highs, and if we go to the lows, there is a possibility for us to create a trend. Doesn't mean it's gonna happen. All I can tell is that this is possible right now. So the structure is and has to be showing a consolidation structure between the waves, which we definitely have in here. I mean, just have a look at this. You can clearly see 2 waves. So this is great. I think we can be bearish. It's not necessarily going to happen. All I can tell is that for bulls, you're no longer going to buy in here. Remember that mature range is at least 3 contacts to the context channels, which we've done. So you're generally not buying the 4th one, especially not when it's again the projected trends you could see. So to me, it's a bearish range. So I'm definitely not going to buy in here. Most likely going to take those who will try to buy stop losses. So my goal in here for now in this kind of context is basically what has the most probable odds to me is for us to digest in this area for a bit, break it down. Okay, it's a range, so we have got nothing to trade in here, and the trend channel makes absolutely no sense. We're generally fucking up those trend channels. So the most probable to me, going down to the bullish context in here, probably pull backing to test the context, the resistant trend line, and if the resistant trend line is sold and we're back to context, is where the breakout trade will occur. So I would say I'm bearish in here, no problem with that. So I did the speculation, even though I missed yesterday's additional entry, which means I'm ready for those breakouts, and those breakouts will be confirmation that the trend is taking place. So far it isn't, so don't be too aggressive, and most likely be patient, because in here, if it doesn't act like that, don't try to break downs. If we just go there straight line, we're probably not going to break down in here. We're just going to accumulate first. Remember, the accumulation phase is absolutely necessary before creating trends. Sometimes it won't happen, it will go straight line breaking, but it's really rare, and I don't want you guys to try getting both feet in that kind of mess. So the current thing is that I think odds are bearish. It's just waiting for this to play its game. We're definitely into interesting areas, which means in here breakdown trades can be taken, but on the shorter time frames context, And so far we tend to believe that a 5-minute chart may do the job. Let's have a look at this. Remember that time frames are just multi-time frame scale. So in here you could definitely have a breakout, but how does that work? Remember that we have to test the trend channel once again. So wait for this to test the trend channel. It's going to pull down. Okay, it's going to pull downward. You wait for the market to test this, go back to context, and if it does, breakdowns will be tradable. All right, so that's basically the plan. So remember that the way you must apply the strategy, either in an intraday basis or any other context, just basically the same old story. You need to figure out what the context is using the previous information you have available. So we've said that 15-minute, when you have this context, means you have to zoom out, which means the big picture will give you a better sight of what the actual context is. All right, so in here, 15 minutes, you have no context, so this is where you take the decision. You make the decision about what the context is, and it's definitely range, bearish range. Therefore, in here, you could be in a breakout area. So 5-minute chart, you can take advantage of this breakout opportunity. But the breakout context, remember how it is, remember step by step, okay? In order to trigger the breakout entry, you need to have accumulation first. So far, you don't have that. So wait for the market to accumulate. If it does break down in a straight line, then normally you should have the speculative trades to play for this. But if you want to take the breakout trades, you must respect the rules. All right, just as a reminder, I'm going to show you what those rules are once again. So we're forecasting to eventually trend, okay? In this 5-minute time frame, we are forecasting the trend. So far, we've been rejecting the trend channel, which means it's pretty fucking positive in here. But normally, remember how it goes, okay? So accumulation, price reject from the trend channel and return to the context. But return means it's tested already. Now we've been testing. If we've done this, we would have been ready to break out trading here. I think it's not yet mature to break down trading here, but probably will be. We do have a breakout, so it could be a candidate, but not necessarily perfectly following the plan in here, as I would have liked this market to test the context again. I mean, if we were just, you can consider it's always shaded areas, which means in here you can assess that this is a context testing. I don't think it is. Reason why, if we just gone a little bit lower in here and then have done that, I would have been pretty much ready to be breakout trading in here. So I would say cautiously waiting for a breakout to occur in 5-minute time frame, and most likely I would say wait for this trend channel to go down and try to trade this context channel instead of just trying to jump in here, as a market, this kind of market generally just pushes back one more time to fuck you up. We'll probably test this trend line. All right, so as you can see, you see this trend channel, probably gonna get there again and no working, then trend trading. All right, so don't take that trade until you get this, and I suggest you can eventually no higher prices. All right, so this is how I'm gonna play this personally. I think in here we're just going to wait a bit, retest the resistance, and then I think this trade is pretty much what I mean, the momentum is over exhausted. So if we do break out of this, it means we're very lacking, we're very much lacking of buyers. It will be a good sign, but just I don't want to be that aggressive in the current context. Volatility is low, so if you're very aggressive, you can just be proven wrong by a stupid risk management. All right, so to me, wait for an eventually a pullback if you want to sell for a breakdown trade in a 5-minute context. And obviously, if you do this, we should never ever break to the previous resistance. So this is where you're going to put your stop losses. Most likely, you wait, you take the breakout, you take the speculative entry, stop loss in here, wait for the breakout trade. So you've got 2 trades to take. Okay, the first one will be near the trend channel in here. All right, so then, okay, you need to have a signal, a red signal. Remember, this is important. When you're preparing for trend, you should have a signal at the trend channel and the red kind of signals. That suggests the market is about to trend. If you have that, you take the trade, you wait for the market to go back to context, which is going to be probably here, all right, in here. And when the market breaks, when you see crosses and anything like that,
when the market breaks down, you take the breakout trade and you let it go. All right, that's how you play trends. If this still sounds a little bit foggy to you, don't worry. We're going to take a lot of those examples when we'll do the MCQ tests and everything like that. All of this should be coming along the way pretty soon. I still can't give you a date. Next week I won't be there. You already know about that. So I expect to start this by the week right after. So hopefully by the end of March you should have your first MCQ test that will allow you guys to be refunded for your monthly fees if you get it all right. And we'll also start all over again the the live room session, in which you can ask me questions in a live session, in a live questions answer session on specific topics that I will put to vote on top of this in Discord. But I definitely want to get back in there. This platform is pretty wicked. We're going to be able to screen share in there right now, and moreover I want to redevelop Discord that's just been left behind for a little bit recently. It's just for users to help each others, and I haven't been there since quite a while, so I want to get back in here, put some motions and invite you guys to join us there. All right, see you later. And oh, sorry, we're just going to take care of the SPX. As a selfish European, I just took care of the DAX index. So this is what? This is Ethereum. Oh yeah, and we can talk about Ethereum for the crypto guys. So Ethereum in a 1 hour chart, we don't do 15-minute trades in here. I think we built a bottom in here in a, we could eventually even 4-hour context chart in here. No, it's 1 hour. All right, so 1 hour, okay. You can see impulse, consolidation, Fibonacci plotting, 61% retracement, context buying. What does that sound like? All right. Really sounds like a trending range, isn't it? 60% retracement in the context, in a signal and triangle. God damn it, that is exactly a trending range entry signal. So what is this context? Is definitely trending ranges. So if you're bearish right now, you're probably wrong. If you're bullish, you're probably going to be right, because this suggests we're ranging to build a trend. Are we already trending? Not yes. We are building we're preparing for trending. Okay, we're ranging before we get to accumulating and trending breakout. Okay, so what we have in here, obviously, mature range, because if you zoom out for this range, okay, this is the range we see on the daily charts. Okay, I'll just use that. Okay, so first contact, how much are we in here? Okay, so resistance, first support, resistance, support. Okay, the latest contact we've been building. Okay, this one, and I think this one is not going to work. As I said, context, trend channel, or context, bam, breakout. Okay, so I think we're mature to trade, to trend, and I think in a 4-hour chart it's going to be looking like that. Getting into context, applying the same old rules. Okay, getting into shit. So getting into context, pulling back to the trend channel buying, and bam, trending. All right, this is exactly what I think it might be happening. All right, just getting in context, not necessarily breaking through this. All I say is this is more than enough. Not even building a new high, just testing those highs again, then rejecting for the trend channel, and this will be more than enough to do this. Other option is it isn't buying in here, and we're going to have an extended range structure, pure and simply something like that. I mean, we go back in context in here, all right, and we don't find support from the trend channel. If we don't, then pure and simply we're going to do a big range. Okay, bam, 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 and then we're going to have to make a lower low than the one we've done in here, pure and simply. But as I think we've done 61% retracement so far, still tend to lead me to believe that we're trending ranging, and that we could be just mature to go trading. But don't overestimate the risk. Don't underestimate the risk. We could very well try to make a tiny lower low in here, probably 121. It's possible. All right, so be ready for everything. If you do take the breakout trades, They're definitely the riskier ones, so make sure you've got speculative trades before doing that. If we do SPX, all right, to me SPX following through the DAX index is exactly the same kind of scenario. In here we're building a range. This range seems pretty immature to me, which means I wouldn't be surprised if the European session brings us down to the low, and Wall Street will have a decision-making process to do in this area. Okay, either that area won't support prices, will bearish trend to the lower support, which is 15% Fibonacci near this area, and I think that's the first profit target area for bears today. I don't suggest you guys target lower prices. Let's consider this as an area. Okay, Fibonacci's are very strong horizontal level, but as you can see, this horizontal level just basically means nothing. So it doesn't mean you get the hell out in here, but you just watch out for this area. Okay, this is an area of interest. This is an interesting price area. Even though I still tend to believe the major support for the US is in here, below the volume area, below the 2700. It's definitely, I think, in here where we find support is 23% retracement, and this is where you can see prices have been tested a lot more. All right, so watch out for this area as a potential risk area. So if you do have profit taken in here, you partially profit take, but just a bit. If you have exit signals in here, then you worry and you take a little bit more of profit-taking layer. All right, so decision area in which only breakout trades can be done, but really risky, and you really need to be cautious with breakout trades. I suggest you beginners don't play this game. Wait to be confirmed trader to trade getting into breakout trades. They're definitely going to rise the amounts you're going to make out of a trade. But if you take too much risk, it's just going to bring more losses if you're a beginner. So don't try to jump higher than you can jump. Just be ready that this is a long shot game in here, and you need to be really patient and not be overconfident. So be aware of that. If you're beginning, you know that the breakout trades not necessarily for you. The trending range trades not necessarily for you. You're just going to try navigating with ranges safely at least in the beginning, and then you're going to start trading the trading ranges and things like that, and eventually trading the breakouts later on. Anyway, so decision area, I would say resistance area, because this is very well probable that we find some gas today and go retracing deeply, because I remind you that we haven't retraced 61% in the US so far. 61% still is there, and we can consider that done, but I mean, at some point, I wouldn't be surprised if the US were just a rush for a 76% instead, all right? So be really cautious about the US. I still tend to believe if you have any bearish entry in here, the stop losses must really be at least there, because I mean, look where the range is. Look at the context. It's pretty fucking far. All right, and therefore I think if you have a stop loss that is not yet in context, all right, and I would pretty much tend to say the stop loss must be above context, and it would be there if you want to be sure not to be stopped out by a stupid trade. Because have a look at this, we're building lower lows, we're also having higher highs, so just make sure you're not having this goddamn structure in here, all right? Because we could very well have that going in here, trying to fuck a stop lossers, and then all right, so I would say put a stop loss at 28.30 if you really want to make sure not to be fucked up by a market that would just go there, fucking all the stop losses that could have been left on top of this, just to fall like a knife right after. All right, be aware that we're in ranges. You really need to be cautious. So trading in here, if the range has to be that wide, you will just be trading the 50% area, which is for dumps to trade. So be really aware that, in my opinion, trading in here makes absolutely no sense, neither buying or selling. I suggest this area is a breakout area only for experienced trader to trade if they feel like we're going to fall like a knife. But to me, this is the speculative area. You should have sold by now and just wait for this to break down. So the actual confidence trade right now is to have sold in here, still having a stop losses set a pretty wide area just to make sure you're not going to be stupidly stopped out, and you just wait for this game to play. That's exactly what I would do, all right? And not really playing this area unless you do this in really intraday scenario and expecting a breakdown to occur. But it's not yet done, and so far we're just dying. I mean, the volatility is so low, it's like nothing happened. Yesterday was really incredible in terms of intraday session, but this is how it is right now. Anytime we go down, everybody's panicking, so all the bears are rapidly profit taking. And as you can see, even how brutal we've gone, the support is still holding. So it's no panic selling for now. It's just not working. I thought yesterday we would have a pushback to try pushing through that support. We didn't even try anything. Yesterday was just a dead session. It's not even moving anymore. It's incredible. I don't believe it's going to last long because the tension is really here, but it feels like there is no volatility, and that's kind of a concern once again, because it really reminds me of those fucked up kind of price action that we've left that we've been through last year, in which there is irrational calm in the market, which is generally going to end bad, and now we know that it was speculative back then. Now it's been happening, so we have that, and we know that whenever we compress volatility for too long, when we fake low volatile trade, then we know how it ends. Then at some point the tempests show up, and it's not pretty. We have some brutal drops of 20%. I mean, it's increasing. Just figure this out. All right, we're just going to broader picture in here once again, and then I'll stop in here because that's not the point. All right, so it was back then, pretty fucking brutal drop, 12%, totally unexpected. Who would have expected such thing? No one, even I myself. I started looking at buying entries in here, and I had to support a couple of days of strong bearishness at the end of the year. Bam, that's a 20. So 10%, 20%. How much do you think the next one is going to be? To me, it's a 30% for the next one. And I'm really honest. I think we can go to this area. I think we can go a little bit, I think we're going to go 30% from the market top. All right, so it's a little bit different. I'm targeting in here, but I can be pretty damn sure that just like I thought buying in here would be rational back then, I tend to believe that buying in here will be rational, but you'll have to wait for us to break down the 2000s. All right, but I still very much expect something really ugly is going to show up for the US. Look at this. Remember what I said? I'm going to trade in this area for the last time. We've been managing to make one close on top of this level, just one. The day right after, we bang it down. And now I think we're just going to go down today. If we go up, I just don't understand that. It's not going to be positive to me. It's more likely going to be negative, but it's still too early to consider this a won battle. But I think anyway, we're just going to expect a pretty nasty bearish move. And as you've seen, if we go 27, it's just going to go there. It feels enormous to you, but it isn't to me, because I think the first decision-making area is in here. And I think this is where we're going to go, oscillating, bang, okay? Oh, not necessarily this. I think we're doing something like that. Bang. Well, sorry, I didn't see this one coming. I think 23% rebounds, excess, and then rebounds, right area, bang, okay, and we deteriorate the prices, and then we kill the volatility, and then decision-making process. That's exactly what I think is the path that will lead us to work on the days ahead. I think we're going to oscillate between those two Fibonacci fans, but definitely not going to trade on top of this one. So am I bearish with the US? Definitely I am. I'm definitely. I don't know yet how it's going to play out, but you definitely have to be bearish. I mean, the cycles are bearish right now, so it's bear time. And I see the bears trying to forecast where they're going to profit take. I mean, god damn it, profit taking to me is below 2700, and I think we're going to go there. So you shouldn't even think about profit taking in the current area. Just let it go. If you're bearish, you wait and you manage the risk. That's all you do. All right, see you later then.